How's it going, guys? Welcome back to the UKnowAdamTsang podcast, where you get to know a little bit more about people, passions, and all things business. Today, I'm sitting across the table from Mr. Joseph Shuford, who is the Director of Government Guaranteed Lending and the Executive Vice President of Synovus Bank, right here in Statesboro, Georgia. Joseph, welcome to the show.
Yeah, thank you for having me.
Now, just to go over a little bit of kind of like, I guess, housekeeping, if you will. You started as a teller in 2002, and then you've made it to this point where now you are the executive vice president. How has that journey been for you?
It's been exciting. Working at a bank's a lot of fun. You get to know your community, get to know the people you're interacting with every day, your customers. And it's great to be able to do that in a place that's home, right? I mean, investing in my community, but also starting as a teller and having appreciation for all the steps along the way to get me here, of the different positions within the bank and respecting what they go through every day to take care of our customers and take care of our small business clients. So there's a great benefit in having that journey versus just immediately going into a position that maybe bypasses some of that. So it may have taken a little bit longer, but I have a tremendous appreciation for our entire team.
And that's definitely something that I think is missing in this day and age. People don't want to spend the time of getting to that point. They just want everything immediate, right?
Correct.
But, you know, there's a huge amount of value that you can offer a lot of the people that are listening in today. And it's really around this subject of SBA loans. This is your forte. This is, you know, what you have done for how long now?
So, day-to-day job since 2016. Prior to that, as a commercial lender, probably since 2010.
Okay.
Did a few SBA loans, but got into the SBA business with the bank, if you will, in 2016.
And what kind of like pulled you in? We're kind of like going over the history right now before we deep dive into how SBA loans can help people. But what kind of like triggered that for you?
So I was able to help a couple of my clients in my book of business as a commercial banker that needed SBA financing by working with our department within Synovus. And one day, sitting at my desk, and a lady I'd worked with on a few loans reached out to me and said, you know, hey, have you ever thought about getting into this line of business?
She was a client at this time.
No, she was a coworker.
She was a coworker. Okay.
Yeah,
and she kind of like gave you the nudge to kind of move forward on that?
She did. She reached out to me and asked me if I'd be interested, and I really thought about it, prayed about it, spoke to some people within our organization that I respect tremendously, and just picked their brain about it exactly, hey, what would this look like? And the two things that they told me have come so true. I just learned more about credit and the ins and outs in credit, how to make a credit decision more so than I ever imagined I would in helping businesses. And then just exposure within our organization of meeting people throughout our 5-state footprint and building those relationships and using those relationships to benefit our team and for me in my career as well.
That's amazing. So, you know, you were a commercial lender previous to kind of like diving into SBA. So what is different about commercial lending versus an SBA?
Okay. Yeah, great question. So SBA lending, we would say, is more specialized. And I don't mean that in an arrogant way. It's just that it's more specialized lending because we have a loan policy at the bank for our commercial loan policy that's, you know, 400 pages long, right?
Okay.
We've got to know the ins and outs of what we can do conventionally to follow the regulations. And then the SBA has their own standard operating procedures that we have to follow for different types of loans and clients and just different types of transactions. And it's very specific and very specialized, and you have to follow it by the letter of the law. And so it's, you know, I liken it to taking a class at college, right? You know, you can get a 95 all day long and you'll be really happy.
Yeah.
But on SBA loans, you have to get a 100 every time on all the documentation that you have to have in order to make sure that what we call protect the guarantee for the bank. And it's like an insurance policy. If the bank doesn't do everything you're supposed to do, the SBA won't honor the guarantee. So it's just what we would say is specialized, a little bit more specialized than commercial lending.
Sure. So that's really interesting to me, right? So, you know, the bank, I think, as you said, has kind of like a set of stipulations that has to go through. But to me, I think one of the questions that I have is, well, why? Like, where is the money coming that's different? Is it money that's coming from the government? is the government lending the money? Like, who's actually lending the money? That's a question that I would have. Yeah.
So the bank actually lends the money.
Okay.
And we are what you would call a preferred lender with the SBA.
Okay.
So we make the decision, and the credit decision. We disperse our capital to the business, but we are able to do it in a way where the SBA comes alongside and just provides a guarantee on those funds.
And what does that mean when they guarantee it? So if it were to get weird, they're going to cover us or what?
Well, so if you were to default on the loan,
okay.
After we've worked out and liquidated any of the collateral on the loan, or you just have no capacity to repay,
okay,
then the SBA would kick in a guarantee percentage based upon the size of the loan and the type of loan it is. Typically around 75%. That shortfall after liquidation of the collateral.
But that's not there if it is a commercial lending
That's
project.
Correct.
Okay.
That's correct.
Okay. So there are some benefits, and are those benefits really on the bank side then?
No, there's tremendous benefits for the client. So if someone were to buy a piece of equipment and look to have it financed at the bank, conventionally you'd be looking at a 5-year, maybe 7-year term, and you'd have to put in some equity into the project. With an SBA loan, you can push that out to 10 years, or in some cases even to 15 years amortization if it's a large piece of equipment. So the extended amortization period on the loan, repayment, if it's real estate secured instead of maybe 20-year term or amortization that you would have at the bank, the SBA allows for 25.
Wow.
And so it just helps that what the SBA would like is to say, we want that capital and that debt service, the cash you'd have to be putting out for your debt service every month. We want to extend that amortization so that you can use that extra money that you would be using on debt service to grow your business, invest it back into your business.
Got you.
And so not only the longer amortization, but less of equity injection requirements. So if you have a project and instead of having to come up with 20 or 25% in from a conventional standpoint, you can in some cases do it for as little as 10% or even no equity into
no
a project
equity
for
down
for an expansion. So
I love that.
But it's there's different factors, credit factors we take a look at and make sure what makes sense for the borrower, and make sure that it's something we all feel comfortable moving forward with.
So ton of information there, right? Like, I think the best way to approach this is maybe start at the beginning.
Sure.
So how does one determine if they need to go for commercial versus SBA? Because you've listed a ton of benefits of SBA. You're saying that, less money down, there's these things that kind of like help, but how does one make a decision on what they should go to the bank for?
Sure. For starters, you need to have a relationship with your banker.
Okay.
Right. I mean, so former commercial lender, banker, I work with our commercial lenders throughout our company, and we're a relationship bank. A lot of banks use that phrase, relationship bank, but it's so true. I mean, if you're coming to the bank, you need to have a relationship with that banker that should be able to help guide you to which path is going to be the best. And can look at your balance sheet and the profitability of your business and the type of project you're looking at to help you determine. It really shouldn't be so much on the business owner as the relationship that you have with your banker helping to guide those conversations.
So first step, find a banker.
That's right. That's right. And I would say that a relationship with a banker or with a lender should be an advisor to any small business. You think about CPAs, you think about attorneys, and you should think about a lender along those same.
Got you.
That same thing.
Got you. How would you suggest someone, like, I mean, obviously some of our audience is listening to this as like a guidance on how to approach, right? So, how do you go out and find your banker? And what do you look for, maybe even potentially in your clients? Like, what do you look for when you're trying to decide if someone is suitable as a client for you?
Oh, man, that's a great question. It needs to be a right fit for you personality-wise, character-wise, right?
Okay.
You need to have a good relationship. When I was a commercial banker, we have something at Synovus called a customer covenant that we all sign on day one of employment.
Okay.
I still have the card in my wallet from September of 2002 when I got a little card to carry around.
Love that.
And one of the things in there is just being responsive and taking 100% responsibility for the needs of our clients and that responsiveness. So that's something we pride ourselves on. And that's always kind of been my favorite part of what we call our customer covenant is that I'm responsible for you and your business to try to make sure I'm responding to your needs. But the character of the banker, the character of the customer goes a long way. There's 5 C's in credit as we're making a credit decision, right? But character is a huge factor for the bank looking at the small business, but it should also be a big factor for the small business or the consumer looking at their bank and their banker. You know, are they honest? They have integrity? Are they really looking out for me? And I would hope that if you would come to any of our team, that you would feel that way.
I've felt it before. You guys have a great team. Met certain members of the Synovus team, and they are all outstanding.
Good to hear.
So, you know, continuing on this path, you know, there was a few things in here. So we've identified you as the banker, right? And you know, I have various different projects that are coming through. Now I have to make a decision if I should, number one, I would actually throw another like option in there. I put my own money in, right? I take care of like the entire investment myself, or I go for the SBA loan, or the final one is, you know, going with the financing from the bank. How does the banker make that decision, or how do we make that decision together?
And that's, you know, I mentioned earlier about that advisory type role, right? So as you're doing strategic planning for your business, and if you have this plan to grow and to grow your business in a certain way, your banker needs to understand that. It needs to understand your strategic objectives that you have, and how can we structure the financing options for you to help you realize those goals, right? So if you're looking to expand your business and maybe you had a really profitable year and you're thinking, man, I'm going to take this big distribution this year out of my company because, man, I've earned it. I want to get paid back a little bit. That's great. Every small business owner has the option to do that, but that's kind of sometimes can be a short-sighted approach, because now all of a sudden when you come to the bank, we're not going to be able to lend you as much money because you've taken some of that money out.
Understood.
And so I think it's so important. The lender needs to be a part of those conversations, you know, helping small businesses understand how we look at cash flow and how are we going to look at your financial performance. You know, here we are in 2022, you know, in 2021, how are we going to look at that financial performance? Well, those conversations should be taking place before the end of 21 for that small business to be able to prepare for growth that they think they're going to have in the coming years, their capital needs that they're going to have, what kind of financing options are they going to need. And so, I mean, that's where I would say, you know, if we sit down and take a look at it, it's how do you plan on growing and expanding your business, and what are your strategic objectives, and how can we structure our products and services to help you achieve it?
Absolutely. So with SBA, right, like with kind of like, you know, that piece, I think a lot of it, there's maybe some mystery there, right? We're coming out of this period of, you know, COVID. And during COVID, I think the government offered a ton of assistance. Now, does that fall into line with SBA lending, or is that outside of the realm of government assistance?
Yeah, so the pandemic relief funding that was available was hopefully a one-time thing.
Okay.
The Paycheck Protection Program, small businesses were able to take advantage of that. We as a company did about $3.7 billion of PPP loans.
Wow.
But then the government also had something called economic injury disaster loans.
Okay.
We'll call them EIDL for short. And that assistance was directly from the SBA, not from the bank.
Okay.
And so a lot of customers took advantage of that.
Sure.
And so those options are you have to either be in a disaster
state.
That's right. Declared a natural disaster by the government, and so every small business was impacted by COVID. But typically that's reserved for hurricanes, tornadoes,
Understood.
things of that nature. But the both of those now, those funding options and opportunities have expired. And so now it's back to traditional financing, your SBA 7A loans or your or conventional.
Now, you mentioned something about hurricanes in there, like natural disasters. When that decision is made from the government to basically make that statement and saying that that does happen, what there's some funds that could potentially help the business get through those tough times. Is that what I'm hearing?
That's right.
Okay. And then how did it, again, I guess going back to the relationship with your banker, if there's anything that you take away from
That's
this,
right.
it's the relationship with the banker. But I guess that is kind of like the person that can help guide someone through that process.
That's correct. Yeah.
Gotcha.
Those loans are taken directly from the SBA and through an SBA portal that they created actually during COVID. But your lender should be able to help guide you. But
Sure.
there are some benefits and drawbacks to anything. And so your lender should be able to help you understand, how that could potentially impact you and if there's options that the bank would have to help with anything.
So now, we've kind of gotten to the point where we've made the decision that the SBA loan is the way to proceed. What are the steps? You mentioned very early on that you got to be perfect in applying for this. What does that entail? Is that data? Is that you need my finances? You need what do I need to give to the bank so that they have the ability to secure that loan?
Yeah, there's certain SBA forms that we have to obtain, an application form, and then a few other forms. But from a financial statement standpoint, it's really nothing different than what you'd need on a conventional loan, right? So we need to, depending upon the size of the loan, once you hit a certain size amount conventionally, you're going to have the same exact information that we would need to underwrite an SBA loan.
Okay.
Where I get into that 100% comment was sometimes the banks may say, well, we'll may take an exception here or there. We may not really need this, or we feel confident here or there. With SBA, though, unfortunately, you have to have all of it, right? Yeah. And it's really a matter of protecting taxpayer dollars and making sure we're doing everything the right way. But there's some forms that are required by the SBA that you can't have a prior loss to the federal government for anything. If you have a criminal record, we just have to know that and have to understand that. And a few other qualifiers, U.S. citizen, obviously if it's a SBA loan, either U.S. citizen or lawful permanent resident.
Sure.
And so that form kind of helps us capture all that data.
That's awesome. Now, what about size of loan? Is there a difference between the amount of money that I can get with either one?
Yes and no. So SBA 7A loan, which is what we do, is capped at $5 million. So any one person, the max they can have is $5 million in SBA debt. But that doesn't mean that your project that we can be a part of as an SBA team is limited to $5 million.
Okay.
So we can do we may partner with our conventional side, and they may finance 2.5, and we'll do 5. And it just kind of dilutes the amount of the loan that's guaranteed. But up to $5 million on the SBA side, some banks will set a cap or a minimum, you should say maybe $350,000 or so, because of the amount. The efficiency with which, from a paperwork standpoint, right, that you can close and underwrite that loan. So, but it caps out at $5 million on the SBA side.
And then with that cap, I guess there are options where they can mix, right? It's kind of like one of those things where you can free flow. Why not switch it where it's like $5 million on the commercial side and then $1 or $2 million on the SBA side? Like
It's a risk mitigant for the bank, right? So we have the guarantee, and there may be some weakness in the credit as we're looking at the credit, and typically it's a collateral shortfall. So conventionally, if you're having a loan, you have to have loan to value requirements.
Sure.
You don't have those requirements in an SBA loan, so we'll call it an airball from a collateral standpoint. So if the loan's not fully secured, or if we're having to rely on projections for repayment instead of historical performance, the bank will want to put as much as we can on that SBA loan because we have a mitigant against that collateral shortfall or against having to use projections.
And by collateral, you mean real estate? What do you guys take as collateral?
It's the SBA.
Will you take my my collection of baseball cards?
I will.
Hey,
the SBA kind of gets a bad rap because those standard operating procedures that I was talking about earlier used to require you'd have to take vehicles. I mean, you'd have to take everything that you would have. But we look at business assets. So are we fully secured with business assets? Yes or no? If the answer to that's no, then we would take available equity in personal real estate. And so a lot of times customers will have to pledge a home, but it's a second mortgage on a home or a third mortgage on a home. But there's guidelines that the SBA has within that as well that we have to go by. But sometimes that folks can look at that and say, man, I really don't want to pledge my home on this.
Sure.
But I would encourage your small business owners that are listening is that, man, do you not believe in your business enough that you would do that? And I understand where they're coming from as well.
Risk.
I'm a small business owner as well. I mean, as you know, so I completely understand where they're coming from. But at the same time, from a bank's perspective, it's like, man, do you not believe in this enough that you'd be willing to do this? And if you don't believe it in enough, then why should we believe in it?
100%. So that's also what you're looking for too, is whether or not they're willing to put it all on the line, right?
Well, up to the we're not going to take a lien on somebody's home if we don't have to, if we have all the business assets.
Yeah. If there's other examples of collateral, but I mean, in America, I think that is something that everybody has, right? That home. In fact, like the government assists most first-time homeowners in securing that piece of property as potential where they can put that in as collateral.
Correct.
So, businesses that are just starting out, sometimes they go through these journeys. And I realize that you can't share everything because obviously you've told me about the car that you carry with you at all times. But what are some of the success stories? Being as vague as you can. I don't want any names unless you. I'm just kidding. But what are some of the success stories that you've kind of experienced?
Yeah, great question. I mean, and we have so many. It's fun. And I think that's when, especially during the pandemic, as we're doing the pandemic relief, the PPP loans, we're up all night long doing those things for weeks. It's just fun knowing that you're making a difference in a small business owner. But there's one or two of those stories that just kind of stick with you, right? Yeah. And just recently, a couple of weeks ago, we had an opportunity for a customer that we did a loan for, a line of credit for with an SBA product. In 2015, 2016 timeframe, and we were working on the renewal of it. And he approached us and said, "Guys, I'm not going to need a renewal. You guys helped me get into this business. You provided the financing to help me get into this and start this business. And I've got an offer for somebody wanting to buy my business now that wouldn't have been a possibility had you not believed in me and helped me finance it." And it was multi-million-dollar transaction.
Wow.
Life-changing, generational kind of life-changing story for this individual. And that's that doesn't happen to everybody.
Sure.
You're like, oh, that's never going to happen to me if you're listening. But man, when you have somebody that's renting their business, the building that they're located in, and you help them buy it, and now all of a sudden for that small business owner, they go from being a tenant and paying somebody else that rent.
Sure.
Now they own it, and now they're paying themselves rent, and now they're building wealth.
That's right.
And we do those types of loans, what we call rent replacement loans, all day long. And so those are fun because you're helping somebody grow their personal wealth by helping them attain that.
Yeah.
But then we do more than half of the loans that we do are actually change of ownership transactions, businesses exchanging hands. And just knowing that those businesses that we're acquiring for someone is a group of employees that, had we not provided that financing, may have been out of a job.
Yeah.
And so think about those families and everybody that you're impacting. So it's tangible, and it's a lot of fun.
So what you said right there was, you love the human aspect of it, of being able to help people. And I see that kind of like with that continuity in all the stories that you told. But also you mentioned something in there about wealth. What do you think is the best way to build wealth in kind of like this day and age, right?
Oh,
So
wow.
you've done that, this period of time for quite some time. You've helped a ton of people. What is some advice that you would give to someone to get to that point?
Man, that's a great question. That wasn't on the pre-submitted list, audience.
It was not. It was not.
We're going ad hoc here.
Yes.
No, so I would say think long term. So from a lender standpoint, I mentioned change of ownership. A lot of times businesses, small business owners don't have the benefit of working for a large organization. You may have retirement planning and things like that, right? So their wealth is the value in the business.
Sure.
But my suggestion and my advice would be that don't prematurely take that wealth out of the business. And what I mean by that is don't be looking at your financials and your tax returns in a way to limit that tax burden.
Yep.
I don't want to show Uncle Sam how much I'm making.
Sure.
Right. And so when you do that, you're taking the value out of the business as well, long term.
Yeah.
And it's kind of sad, but we'll see it from time to time. We'll have folks that have done that for years.
Sure.
They have tried to run as thin as they could to reduce their tax burden, and then all of a sudden they get ready to sell their business, and they go and they show a huge profit.
Yeah.
Because they're trying to drive up the value of their business.
Yep.
But that's not really how it works.
That's right.
Right. I mean, they're really it's pretty short-sighted approach to go about that way. So my advice would be thinking long term. Some of the best run businesses and best business owners that I know that I've had a chance to work with, they report everything. They don't withhold anything, and it helps them grow their business organically.
Yeah.
And provides tremendous wealth for them later on whenever it comes time to sell that business to somebody else.
I love what you said about short game versus long game, because I think that is something that, I think at the very beginning we were talking about this, where, being short-sighted and taking everything at this moment in time, not planning for the future, is a mistake that I think a ton of people make. They're not willing to go through the journey of kind of like, laying the foundation and getting to building block by block to get to that point.
Sure.
And that's super fascinating that you mentioned that, because I feel like that is the same thing that is able to build wealth for people moving forward. Sorry for going off script a little bit. To pull it all back, how would you advise someone? We've already kind of like gone through the person, make sure that you have your banker secured. But, after they get their SBA loan, what's next step? Once they've been approved, how do they kind of like, how does the money come down and go into their bank account, and how does that facilitate?
Yeah, so with an SBA loan, the bank's providing the funds, dispersing the funds at closing. And so there's various products within the SBA 7A that are available. So, if it's a term loan, that money's just dispersed right at closing. It may be a line of credit, and if it's a line of credit for working capital purposes, then the bank would control the disbursement of that, and you're reaching out to the bank. You may need what we call a contract cap line, or you may be in exporting and doing international trade, where we have products and services that we can finance exporting activity, and we monitor that on a monthly basis. And we provide the disbursements of that into your account and help control the disbursement of that. And so there's various options out there that are available.
Yep.
And it just depends on, are we buying some real estate, or are we need something for working capital purposes?
Yep. Well, Joseph, thank you so much for spending some time with us. I've learned a ton. I think, the audience is also very lucky to have you come on to the show and be able to explain to us some of the things that you do and the things that you provide for our community. But I appreciate your time. How do people get in touch with you?
Sure. I work here in Statesboro, and so they can stop by the main office here at Main Street. But also email Joseph Shuford at Synovus.com.
Yeah.
And I'll be happy to to learn more about their business and see if we can't partner them with the right group of folks to help them grow and expand and build that wealth.
Awesome. Thank you so much. I appreciate it.
All right. Thank you.